All right, a quick restart. Very good afternoon. We are starting with the session number 5. And today we are going to be discussing further about stock market. But before we do that, there's a quick recap, especially also because Adit and Jay did not attend the last two classes and would definitely want them to be updated with what we're going to be discussing right now. All right. But before we get into the detailed discussion, my question to them is, have they heard about what exactly have they heard about investment from their parents? What all do they know? Let's have a little informal discussion on that. Adil, just the terms. I'm not asking the investment details your parents are into, but all I want to know is any term that you've heard about from them.
Yeah, they talk about stock market and shares a lot.
All right. And what else, Steb, you heard terms of, but do you make sense out of it?
Or not really.
Okay. And have you heard about like something investment in bank, fixed deposit?
Yeah.
Okay. So these, right? So, and what about Jay? Any term that you've heard from your parents?
No, they don't talk about it that much.
Okay. Or maybe they've spoken and it didn't register. Do you think that could also be the case?
No.
Okay. All right. All right. Okay, tell me first, can you see my screen now? Can you see my screen?
Yes.
Yes, ma'am.
Okay, great. So today we will be discussing specifically about stock market. But before we do that, here is a quick recap. Sounds a little complicated. Debt, equity, mutual funds, bonds, SIP, lump sum, stock exchange listing, global news. Forget the seventh one. I'm not covering the seventh one. I wanted to do that, but we'll spill that to the next session. So today, all this is going to be crystal clear for you. Now, the only thing I want from you both is just a little bit of more participation. Where you don't understand, please tell me. All right? Do you promise me that you'll interrupt? Because here, there's nobody going to judge, right? It's just the three of us. There's no exam at the end of the day. So there is no inhibition. There is nothing going to hold you back today. So all I want from the two of you is ask me where I'm not able to explain properly. Okay? So a quick recap. Typically, this was an activity, but let me do this first and then we'll convert this into an activity. I'll come back to the activity a little later. Now, some basic things were there that I want you to remember for this session. Though it's again an activity, unfortunately not doing it, but let's do this here. Whenever we want our money to grow, remember we've done that in the first two classes that, you both children need to understand one thing, that at this point of time, your parents are providing you money, right? But that's not going to be always the case. You're all going to step into your parents' shoes where you will have your own family. Even before you have your own family, you'll definitely want to be earning so much that you can enjoy life. You can buy a big car, you can travel the world. And you don't have to ask your parents for money in your 20s, right? By the time you pass out from college, you hope that you'll have a good job and you can afford whatever you want. You can have a good girlfriend for who you want to take her on a date, and you don't need to worry about asking your dad for money, right? So you want to be what? Financially independent. And how are you going to be financially independent is being a little wiser. And trust me, when we talk about investments, it seems really complicated, but it's not complicated because all we need is a little base understanding, a little bit of patience, and there we are. So before I move on, a couple of things that we should always remember in general, which are the principles of investment, are that there is when you get money, when you give money to somebody, it becomes your principal, right? Now, whenever you give money to somebody, whether it's to bank or a person, and that is something that you're lending to someone, right? So when you get the money back, you obviously want some more money to come back to you because that's your interest, right? So it's called the interest. Now, you would always want more interest, right? So that you're earning more. Are you getting me? Are you getting my point? Are you getting my point? So there's always something that you look at. There's something which is known as a simple interest and there's something which is known as a compounding interest. Now, can you see this here? Is it zooming for you guys also?
Yes, ma'am.
Okay, so nothing complicated. Just this much that you need to understand is there is a simple interest and there's a compound interest that is there that we need to understand. And why am I explaining to you? Because as intelligent people, what you want is you want to earn interest on your interest. Like you want to make money on your own money, right? And it's a very, very simple concept. It's like a magic in investment. So you must understand this. So simple interest is this is the amount that you give to somebody, and at the end of it, you get straight away just 10% on this. This is what our mind says, that after about so many years, you get a certain amount. However, in compound interest, that's the magic. You give a certain sum of money, which is the same. When you get interest, which is 1,10,000, your amount on which the interest is calculated next time gets added to the principal. Now, just come to the second line. Second row, it says, what is your amount that you are going to take into consideration for calculating the interest? It is 1 lakh. You earn interest is 10,000. So next year rather, here your amount remains the same that you had invested, but here it gets added to 1,10,000. And see this amount, 1,10,000, 1,21,000, 1,33,000, 1,46,000, 1,61,000. All this is increasing. Whereas here, it is not increasing, it remains the same. So, Jay, you would have done it in your class, right? You would have done it at your school, right? What is a compounding interest? You would have heard about it, right? And trust me, when we do these compounding interest calculations, you have online calculators that you can use as smart investors, but Adin, you probably haven't done it at school yet. Have you done it yet?
No, not yet.
Okay, but it's just simple logic is that you earn interest on your interest, and that is compounding interest, and that's what, as every investor, we look at that. Okay, moving on to the next logic that you must always retain, that for any investment, you need to take into account the time, risk, and knowledge. To elaborate on this, Adin, how young are you, bache?
13.
That's young. And that's what I always tell everybody. You know, what I really am envious about all of you is that you're young, okay? And so you have a lot of time to invest. You have a lot of time for your money to grow. I'm 51. So if I'm 51, you get it? If I put in money right now, I definitely don't want my money to be blocked for a very long time, right? Because by the time I'm 60, 65, I probably will not be able to climb up the hills, do so many things that I can. So I would want to save my money for a little time. Whereas you, Adit and Jay, will say, I have a lot of time in hand, right? So you have a lot of time in hand. So you can afford to keep your money, invest your money for a longer time. And since you are at that stage of life where you will be earning money, you can afford to take a lot of risk in life. I am 51. I will not be earning money forever. There's always a retirement age, maybe 20 years, but I can't be earning for eternity, right? So I do not want to take so much a risk. So time and risk are more or less correlated. How much time you have and how much risk you can take. And knowledge, I'll come to it a little later, because knowledge and fixed deposit, you do need knowledge, but you can get that knowledge. But if you're going into share market, you need a lot more knowledge. This point you'll understand at the end of it. Got it? And always in a stock market, when you see, you'll see an upward trend and a downward trend, that is bull and bear. Make sure you see last week's class. It'll be a lot more clearer, Jay. I'll send you the video. I know you'll not see the video, but I want you to see the video. Okay? Because it'll become a lot clearer. Just trust me, play that, let it play in the background, even when you're doing something, but I insist you must see that, okay? So there's a bullish trend, there's a bearish trend. Bullish trend is when your share prices are going up, bearish is when they're coming down. Okay, we had done that last week, but I guess we'll come back to it a little at the end of it, okay? Now here is one story that we must go through, okay? This was done last week. I'm repeating it. Let's start. So Have you all seen this brand called Cremica? Your mayonnaise at home or Harvest, your breads are there. Have you seen that brand at home in your? Okay, next time you do that, sauces, you have tomato ketchups which are there in the name of Cremica. You have ice creams of Cremica. They're pretty popular in certain places. So maybe you did notice it, but next time when you buy something or your parents are serving something, try and get hold of Cremica. Now this has a very, very interesting story. So let's just pay attention to the story. Now, Cremica is a brand. How did it start? There is this lady called Mrs. Bector. Her name is Mrs. Rajni Bector. I think that's what it is. Yeah. So this is when she was only 17 years old, she got married. Now, when she got married, she went to this town called Haryana. She went to this town, which is Ludhiana. And Ludhiana was a very backward city that time. And what exactly happened there? When she went there, she was just 17-year-old. She started spending all her time in cooking. And slowly and gradually, what happens is that, she has 3 kids. So her life changes. Her life is focused on her kids. But her kids are in Ludhiana, only 3 cars were at that time. I'm talking about way back in 1950s. That's the year that she moved to Ludhiana. There she decides that she's got a lot of time. Now these kids are a little older. They go away to the hostel. So she decides, let me start improving my, cooking classes and cooking skills. She starts baking a little more. She starts trying different ice creams and people start appreciating. And slowly what happens is, since she had a lot of time, she decides to set up a cart, and slowly she gets a grand success here at one of the fates. She does really well. She gets encouraged. She moves on and she opens her own bakery in the back of her house. That does even better. The entire Ludhiana starts buying from her. Definitely, if your business is doing well, what are you going to do? Next obvious thing is, you want to grow. You want to grow more and more, right? So then she sets up a big factory. And once she sets up a big factory, she's doing really well. She's supplying all over the country. And that's the time around when McDonald's comes to India. Now, when McDonald's enters India, they need bun supplies. Somebody who can make the buns. And what happens is, Mrs. Bector gets the contract for making these buns. Are you with me? Now, if she gets a contract to make buns for a big company like McDonald's, you understand how much more capacity she needs to increase, right? She needs to grow and grow, right? Because in the same setup, she can't make buns. And at the same time, her other business is also growing. So she needs money. And when she needs money, what exactly does she need to do? She will need to buy what all? Come on, let's unmute. Hi, Uday. Welcome to the session, Bacha. We are doing a recap of this session because the two of them hadn't done it. But the next slide onwards, we are moving on to the present session. So luckily, you haven't missed anything at all. All right. So I want to ask Adyan and Jay, right? What do you think will she need the funds for? Typically, just a common sense thing. She needs to make more buns. What do you think are the requirement of funds going to be for? Adyan?
Better equipment and a bigger factory.
Yes, absolutely. She needs to do that. She needs to pay to the staff also, right? So she needs more and more money. She needs a lot more money. So in that case, what does she do? She has 2 options. What are the options she has? Come on, what options does she have to get money? This is the crux of the whole thing. Come on, you'll understand the stock market right now. No, for investment, you need money, bache.
Take a loan.
Yeah, absolutely. She takes a loan. Now, Adyan, you understand, invest means completely separately. Invest means you're giving money to grow. Forget about that. She can't invest because she doesn't have money. She needs money, right? So she needs money. Jay says, yeah, take a loan. She can take a loan from the bank. But Jay, if you take a loan from the bank, what is the problem? You have to pay interest, right? And you also have to pay the amount that you're taking back to the people that you're taking it from, right? So there is a little problem. However, there is another way. That is what we are discussing, which is nothing but stock market. Here, just pay attention to this. I'm going to enlarge this again. This is what is nothing but a stock market. Okay. You see, this is the company and this is the entire shareholding of the company. That means this is a value of the company. Okay. Which is totally under Mrs. Bector. But what does Mrs. Bector decide? She decides, let me, if my company's worth is, let's say, 10 crores, let's say I need 2 crores for my business to grow at this point of time. I'm just saying hypothetically, these 2 crores that I need for my business to grow, let me just get it from people. All right. And how does she do that? She opens it up for investment to people. And she issues shares. And that's where, and how does she do it? Through an IPO, initial public offering, and where it gets listed on a stock exchange. And what is a stock exchange? Where people can buy and sell the shares. And this is what is share market. Have you understood it? Okay, if you have, let's further elaborate on it. This is where we get into our session. Now what we are going to be doing is, here I am. Okay, it's basically a repetition of what we did last time, but this is the story where we're going to give it a little more technical terms. That's me. I'm taking this session. Okay, supposingly DNI does really well. And what happens is I do my mass, whatever ways my business grows. Here it is. Now Dreamers and Innovators becomes really big. And I get about over 10,000 students. Now, how do I do? What am I going to do? And I decide to have a corporate office. I have a corporate office. I hire a lot of teachers, right? And then I further succeed. DNI does really well. And then I need to have multiple offices. I go to different places within the country. But since it's online and global news, somebody in the US would also be interested. Somebody sitting in Mexico will also be interested to know what DNI is doing, right? It's global events that everybody is interested. So then DNI becomes even bigger. And when it starts becoming bigger and bigger and bigger, I definitely will need to open more and more offices. Okay, what happened? Pardon me for this error. I don't know what happened. Yeah. Can you see this? Yeah. Can you see it? So now DNI has become even bigger and bigger. And DNI now should open corporate offices all over the world. Obviously, here is something that you need to understand because I'm adding a little technical terms to it. We are today here. We are today here at this stage where I am taking this session. Tomorrow it grows. What am I going to do? I have some savings. I'll put in my savings. I'll take some money from my husband. I'll do whatever. Set up a corporate office. Tomorrow it grows even further. What will happen? Because now I have a lot of staff, right? Now we're all going to just use our common sense and logic. I need more people. So what am I going to do? From one person company, I have to increase it to more people in my company. So right now it is nothing but a proprietorship. That's a form of a company where only one top person is there. Then it becomes a partnership, private limited, and ultimately it becomes a public limited. So I'm not going to be doing the in-between one. I'm just talking about a sole proprietorship where there's one person managing the show to a public limited company where I have a lot of people who become part of my company. As the growth is happening, I'll be taking in more partners, and eventually I would like my company to become a public limited company. This is the term that we need to know. And this was the journey of Mrs. Bector also. As the business grew, more funds are required to expand, and the company's journey also changes to a public limited. That is, a company now has the right to sell the shares to public to raise money. And why would I want to do that and not take loan? Adin and Jay and Uday, just simple things. Why would I want to raise money from common man?
And because interest rates avoid kindness.
That's right, Adin and Jay. Does that make sense? Because if I take money from people, like I tell, your dad, your mom, that, you might as well buy, or I declare it, I just make it open and anybody can invest in my company. I don't have to return the principal to that amount, right? They will buy shares in my company, DNI. So they get a chotu part of my company. But I don't have to return it to them. What am I going to give them in return of the funds that they give me? If DNI does really well, they can sell that share to somebody else, right? And make their profit, because that's one thing that is going to be there. Also, if DNI does really well, I will give them dividends. That means a little bit of my profit I share with everyone, and that becomes dividend. So anybody who invests in DNI will be entitled to one, profit of the company, which is like a dividend. Two, what they can be entitled to is the appreciation of the share value, which will give them profit. Is that making sense? Is that making sense? Right now, we are all on this side where we are behaving as a company. Like, how does stock market, what is a stock of a company that gets traded on a stock market? That's what I'm talking about. Have you understood that much part yet? Have you understood it? Okay, so here it is. This is something that we need to understand. Okay, there's one slide before that. And this entire process where you're raising funds, DNI is raising funds, is nothing in technical terms is called I'm raising equity. Okay, I'm raising an equity by issuing shares in the market to everyone. Got it? That's raising equity, and that's getting my stocks traded on a stock exchange. So this is what is equity. Equity is nothing but it means owning a part of a company. When you buy a share of a company, you own a small piece of the company, and this is equity. Okay, so you become part of the company. And secondly, as a part owner, you share the company's profit, which is dividends, and you can also benefit from the company's value when your shares become more and more more expensive. So this is typically equity. Equity is divided into number of shares, and as you own these shares, you own the equity, you are also part of this big company. So if I have Reliance shares, okay, it means I'm an investor in the company. If Reliance does really well, gets more orders, does really well, my share value will also increase. Okay, now this is an activity which we had done last week, that how the share prices fluctuate in the market, because the company is sometimes doing well, sometimes doing bad. So company will not necessarily always do well. Their value will keep fluctuating depending the news. And since you're DNI students, we do so much of global news. All the global events will have an impact on not all, but depends. Like, global events have a huge impact on the share prices. Okay, so that's something that you can understand and relate to. So equity typically consists of two, which is the owner's investment. Like in DNI, I've invested a lot. So that's my owner's investment. Whereas your parents who will buy shares when I launch an IPO, that will also be part of the equity. So equity will always be the owner's equity investment. And since DNI became a public limited company, it becomes the public shares also. Okay, tell me if you understood this much, then I'll move on. Have you understood this? Please let me know. Adin, Jay, did that make sense? Yeah,
Yes.
Uday? Okay.
Yes, ma'am.
Okay, so this is all like when you think of stocks, your parents will talk about investing in stock. Always think from the other, you understand that you're investing into the company. Okay, now where are these stocks going to be exchanged? If I have some shares of DNI, I'm not going to call people home. All right, come to this house, and I'll give you some shares. No, it doesn't happen like that. I can't come to your house and give you the shares. No. This is the old form way that it was being conducted, but right now it's all a paperless form, digital form, but it's for easy understanding. Let's go back to how it was earlier. Earlier, if I go back to about 30 years ago, how did it function? If DNI was coming out with an initial public offering where I was giving away the shares to people, I would be printing tons of these share certificates. Now, if I enlarge these share certificates, each share would have a share certificate number, and whoever gets the share will have the name printed and how many shares there are. Okay, so this is a DNI certificate about 30 years ago. Okay, now of course this is all paperless. There's nothing like a share certificate given here. That's in a different form of a demat account. However, once the shares are allotted to the people, there is a particular building which is known as the stock exchange where these shares are traded. Again, now the concept is all digital, but I'm talking about years ago. There's a stock exchange where these will be exchanged. What that means is, if anybody knows that DNI is doing really well, they want to buy shares. So what are they going to do? They are ready to pay a little extra to get those shares, and that's where they get profit. The person who had bought earns profit. You get it? So in a stock exchange, this is DNI share certificate. This will be bought and sold amongst people. And this is exactly what was being displayed in this image here. Now I come back to here. This is and these are two stock exchanges in India, National Stock Exchange and Bombay Stock Exchange. National Stock Exchange is a more recent one, which adapted the digital transfer much sooner than Bombay Stock Exchange. And here is where people are buying and selling shares, and that's how they're making profit. And this is known as trading. This is known as trading of shares. All right? That is what, Uday, that's what mom does.
Yeah.
Right? Exchange. So just for your information, Uday's mother is majorly, she follows news, she exchange the entire knowledge about shares. She's very well read. What does she do? She buys and sells stock. Now that's a quick way of making money also. Okay, so she buys something and then she sells it, and in between she makes a profit. Who am I? I'm an investor. What do? I buy shares and I keep it. I don't sell my shares because they keep appreciating. The longer you keep, the more profit you can maintain. Not that this mom is not making profit, she's making very good profit, but you need to be well read. And that's the reason why I said you've got to keep knowledge about the shares of the companies that you're buying. All right. So that is the reason why, again, knowledge is an integral part. In order to buy a particular stock, you need to know about the company. Okay. And one more important thing, stock exchange is very, very important because it is determined, it is the place which has been authorized, which is under SEBI, a body, an autonomous body, which is making sure that no ghapla happens in the stock exchange. After all, there has to be some solidarity, some reason why we can trust that stock exchange will keep my money safe, right? Supposingly Jay's parents and Adin's parents and Uday's parents decide to invest here, it's going to be important that SEBI is controlling this. Got it? So the terms that I hope you've understood and you take away with you are that what is a stock? Because it's just a part ownership in the company. All right. And how does a stock owner make money? Simple: dividends and by selling shares. Okay. So stock market is really important for a business, because for DNI it's important, or Mrs. Bector it was important because she could get a lot of funds. I can get a lot of money, not loan, where I don't have to pay interest. And it's also a huge opportunity to grow for me. Right? That's from my perspective. However, now shifting the perspective to an investor, why would people want to invest in stock market? Because if a company is doing well, your share prices can really grow. Okay, so at the initial stage, the share will cost about maybe 100 rupees, but after about a few years, it can go, the prices can really shoot up. Next class, I'll come up with these insane prices, also how the shares prices have increased. In fact, you can do that, both of you, all three of you. Can you just quickly check HDFC Bank at the time of launch? What was the share value? Can you just check, all of you? Or you can also do that. There's been insane stories of some interesting stock prices shooting up. Somebody's checking that HDFC Bank?
It's saying just 10 rupees per share.
Okay, now what is the value of the stock? Jay, what is
1,600.
right? So if 10 rupees somebody had invested in so many years, and when was that initial price, Vita? Initial date. Adil, initial date. When 10 rupees, I think I'll tell you, this goes back to the year.
March 14th, 1995.
Exactly, 1995. It costed that much, and today it costs 1,000 rupees. That's a massive return. Okay, Uday, Jay, and Adil, all
Yeah.
of you will give me one piece of information. MRF Tires. At the time the IPO was launched, Jay and Adil, IPO is initial public offering. That's the first time the share gets listed in a stock exchange. Okay, and after that it's trading. IPO is initial public offering, initially when the stock is offered. Tell me, what was the price of MRF Tires at IPO
I'll check.
and the date? It's really interesting. Let me see. Okay, let me see if I can get hold of a really interesting video where that'll. Come on, quickly tell me, MRF Tires
11 rupees.
and which year?
Or 1993.
Okay, okay. Can you write that down? Can you write that down somewhere? If I open a whiteboard, can you scribble on that? Here, can you write that here? Somebody's writing it? Adil? I'm just trying to figure out.
I'm just waiting for my Google to open. I don't know why it's just not opening.
Oh, okay. I want you guys to see this really interesting video. Okay. So the story is like this. How do I play this? How do I play this here? So there's this company called MRF Tires, right? We've heard about it, right? Now the interesting part is, in case, and what is the share value right now? In 1993, it was just 11 rupees. Just check.
54,000.
Check again.
1,14,000.
Can you imagine? Can you imagine this? So it's so damn interesting that sometimes the share prices can be. So in 1993, that is what the price was, right? Now, what is the year right now? We are sitting in 2025, right? What is the share? 1 lakh, right? 14,000, right? Can you imagine how much the share price has increased? You have to genuinely see this particular video here. I think I can now stop sharing and I just show you this.
Yeah.
So there's this person, just see this, okay? It's blow your mind. What stock market can genuinely do, and that is the reason why sometimes people fall into the trap also. Here we go. Okay, this is basically a 33-second video, and it had genuinely this had created news to a different extent level altogether. I hope just let me
You're
know
not
if you can
sharing
see
it.
this. I
You're not
am
sharing.
giving him 1 minute. Now sharing it. Can you see the screen? Tell me if you can see the here.
Yes.
दिल्ली से हमारे साथ हमारे अगले दर्शक हैं रवि। इनसे बात करते हैं। रवि, मॉर्निंग टू यू। क्या पूछना चाहते हैं आप?
सर नमस्कार।
नमस्कार
सर मेरे दादाजी ने 1990 में MRF शेयर्स लिए थे 20,000 सर।
अच्छा, जो शेयर्स हैं आपके पास, इसकी कुल वैल्यू इस समय की वैल्यूएशन के हिसाब से MRF चल रहा है करीब 64-65 हजार के बीच में। उसके मुताबिक करीब 130 करोड़ के आसपास आती है। अब ध्यान रखिएगा।
You understand what this happened? So this gentleman's dad in 1990 invested in shares of MRF Industries in the IPO. 20,000 shares into 11 kitna tha? I have a calculator. How much did he invest? 20,000 into 11. He just invested 2,20,000. At that time in 1990, that was still a big amount. Okay. Now today, now we're talking about this so many years ago. Supposedly, his grandfather just took out these papers and gave it to his beta. Ki beta, yearly 20,000 shares are there. How much would be the value of these 20,000 shares today? Come on, Uday, do your maths and tell me.
Wait,
all
what
of
was
you.
what was the original number?
20,000 shares.
Yeah.
Okay. He bought it for 11 rupees in the year 1990. Now, what is the value of 20,000 shares, taking into account that the share price today is 1,14,000 per share? Can you, and I need those, that's the kind of effect it happens sometimes. Oh my goodness, I'm losing the track of zeros.
Wait, so
You guys have to tell me.
you have to subtract 220,000 because that's how much he spent.
Stop, let that be. I'm just asking what is the share value right now?
Wait, what's the current one?
1,14,000 per share.
1 lakh.
Jay, can you convert it? I'm very bad with this. So hundreds, thousands, lakhs. Oh my goodness. It's 228 crores.
That's two. It says 2 billion. It's 2
Yeah.
billion.
228 crores is the value of price
Yeah.
of his MRS shares. So that's the kind of profit, that's the kind of magic that happens in the share market sometimes if you invest in the right company at the right time with the right knowledge. Okay, so you understand this part. That moving on. Here we go. Okay, got it? So that's the reason that from an investor's perspective, you become part owners of successful companies and you earn returns two ways: dividends and selling shares. So today this person sells that, it's going to be really, really good. Got it? Are we clear about this much? Are we clear? Can we move on? This was equity. What we discussed was completely equity, expanding our knowledge. In addition to equity, we need to understand a couple of other things. Have you all watched Shark Tank? an activity of Shark Tank is coming up. Here we go. Now, these are these sharks which are right here.
What Shark Tank?
Haven't you seen Shark Tank, Indian or
I have no idea what Shark Tank is.
really? Okay. Okay, Jay, you know what Shark Tank is. Adil, you know what Shark Tank is all about? Have you seen that? Any episode of Shark Tank?
I know what it is, but I haven't seen it.
Okay, it's really interesting. Do that. Okay, it's Shark Tank at my house. My kids are, I'm sorry, my son especially is hooked on to it morning, evening, any given time. So maybe, I'm sorry, I presumed everybody would know what Shark Tank is.
No. I've watched most of the
You
seasons.
want your pot.
I think I've watched like 14 seasons or so.
Okay, great. Okay, hold on. So, Adil and Jay, it's really interesting. Do see this if you haven't seen it. It's really nice because these are those people who are, these are great startup entrepreneurs. I think one is of Lenskart, one is of Shadi.com, one is at Sugar Cosmetics. These are all people who are here, sitting here. And Zerodha, all these big people who've made money recently, the first generation entrepreneurs. So what are they doing? They sit here. They are very happy to invest in people's companies. And these are those people who will come and make a pitch that, come and invest in my company. So supposingly, again, simple thing to understand would be DNI only. Tomorrow, if I could be standing here and trying to convince all of them, please invest in dreamers and innovators. Just to give you the idea. Okay. So let's understand this a little better. Now, these are two people who've come here to pitch. And what are they doing? They present an idea and then they're telling them, now you please give me money in exchange of equity or a debt. Got it? Simple. Equity we've understood. When they say invest in equity, what will that imply? Adin and Jay, just tell me in simple words. What do you understand? They say invest in equity. What would that imply?
Like invest in ownership or some part of their company.
Absolutely. Perfect. Jay, I'm sure you understood that too, right? Now, these people what do the sharks do? That's typically what they do is, right? They will listen to the whole thing, ask them 10,000 questions. What is this? What is that? What is your sale? What is your earning before tax, earning after tax? What is your prospects? Tell me about your promoters, blah, blah, blah. They understand the company. That's a knowledge we also need to gain when we are trying to invest. So make sure you see these episodes, and from a shark's perspective, always that's how an investor's mind should function. Ask questions. And how do you do that? And today you're living in the day age of AI. It's so easy to get your answers to all the questions. So towards the end of the show, all these people who come to pitch will make an ask, right? And the ask is usually equity or debt. Let's understand between the two, because after this is coming an activity just to hammer this concept further into you. What is an equity?
My friend's father went on Shark Tank.
He did?
Yeah,
Oh my goodness. Which season?
I don't know.
Jay, if you have an access to the recording, will you be happy to share it? Did he get the funding?
Yeah, I think so.
Wow.
Which company? Also, wait, Shark Tank India, right?
Yeah,
Jay, come on. Your dad's name is Mr. Chetan. What's the full name?
not my dad, my friend.
His
Friend's dad. Oh, I thought your dad. Okay, friend's dad. Can you get that whole? Would love to see that. Okay. So if you know, you ask him, did he get the funding or he didn't get the funding? I'll be happy and curious to know about that. Okay, so this is equity. So he went there. I don't know, was it for equity, right? Some sharks like to give funds in the form of a debt, but usually they ask of the people who go there is equity. So equity is giving away a percentage. You see that in exchange of money. Debt is taking the loan on interest and then you have to repay. So it has its pros and cons. When will you look at equity? The good part is you don't have to repay. And con is you lose control over the company. That's the equity, right? So because if somebody invests more than 49%, then DNI comes at 50%. That means I will always have to take permission for everything. However, if the person in my equity, in DNI's equity, is split, somebody invests only about 10%, I'm still the owner of my equity is how much? 90%. I don't have to depend upon that 10% pala banda for any decision taking. I don't need to take his approval typically, right? So equity can have its downside if the percentage changes. In debt, the biggest, the biggest positive thing is 100% ownership remains with the company, and we know the negative side. You have to pay the interest, and even if your business doesn't do well, you will have to repay the money. In case of equity, if the company doesn't do well, how does it matter? I don't have to repay the funds, right? That's the cunning. As the promoter, I will say that I don't care. After some time, I'll declare bankruptcy. So whoever's invested in my money, too bad. Nahi milega kuch. All right. So that's typically the difference. In case of debt and loan, just go through these points. The risk in case of debt of a company is very high. If the sale drops, it's low if the investors can share the risk in case of the ownership, right? So that's what it is. Now here, there's one more thing that I want you to understand. There is, if a company is really big, here we're not talking about a small company like DNI. We're talking about a really big company like Reliance, Adani. We talk about Tatas. We're talking about the government of India. I'm talking about like really, really, really the big companies. A very safe form of investment is bonds. Something that, again, not too many people know, but you should tell your parents, and you should be more aware about this, is Reserve Bank of India has a separate side dedicated to bonds. And where you guys can't because you're less than 18, but all the people who are above 18, they can invest in the bonds here, and which is a very, very safe form of investment. So bonds are usually issued by government or large companies to borrow money through interest, and these are low form. These come with very little, minimal risk also. Okay, so are we clear on this? Are we ready for the next? Yeah. So now here we go. Now there are going to be 3 pitches here. Become a Shark Tank. Change your names to one of the Shark Tanks quickly, step 1, and let's see if you're ready for taking a decision on what kind of investment you want to give, equity or debt. There are going to be 3 business pitches. I want to see how your wisdom is. Uday, change your name to one of these, and make sure you can't repeat. Okay, Adil, Jay, change your names. You want to be Aman? You can be Namita. You can be Piyush. You can be Vinita. Aman is, what business is Aman into? I keep forgetting. I know Piyush is into Lenskart. Aman, I don't remember. Anyways, that's not important. Okay, everybody. Okay, you've changed it to Firangi. I wanted you to be one. Okay. All right. You're in the American Shark Tank. Okay, Jay. Which one of these sharks do you want to be? Change your name. It's not such a complicated question.
It is.
Become one of them, Baba. Otherwise,
Ma'am, I have to change the name in the meeting.
yeah.
Oh.
Did I? Oh, you thought, okay. Like can you become one of these, please? It'll be so much more fun if you could comply with the instructions here. Thank you so much, son.
Yeah. What? You asked me to change the shark.
Yeah, change your name to one of the sharks.
Yeah, I did. This is a shark.
I said Indian. Okay. Okay. Piyush. All right. Aman. Perfect. We are ready now. Okay. So here are the next pitches, which goes here. All right. This is the picture. I'm going to read the idea, and you have to figure out.
I'll give 56 crores for free. No need to give me back.
Okay. Okay, I just have 24 minutes and I want to cover a little more. Okay, so come on, let's focus on this. They turn on your camera. Ashneer,
Why?
turn on the camera. Okay, here it is.
don't
So it's a tech genius. It's an AI. Okay, this is the name of this is the pitch. This is the business idea. It's a tech genius. Okay, here I am. I'm the one who's doing that. Okay, I'm proposing an idea to the three sharks here. Tech Genius is an AI powered tutoring app that will help the students learn so much better. Now, we have about 10,000 users, but we need funding to make the market grow, right? So there's a huge potential of this. And I want more funds because I want to research more and add more features to this app. So my ask is either you give me 8 lakhs and I give you 10% equity, or the other option is you give me 8 lakhs as a loan. Okay. Now here we are presuming you're not asking me any questions Uday. Hold on. Okay.
But what if I don't want to invest?
No, that option is not existing, Uday. The objective is to understand between equity and debt here, son. All right. So let's just focus as an investor. What are you going to do? We'll do Masti some other time, but right now let's just understand the difference between equity and debt. So here there are two options I'm giving you sharks, equity or debt. Which of the two will you prefer for my business, which is about an AI powered tutoring app? No. Aman, you are investing, but are you choosing debt or equity? There's no option of no.
Debt.
So are you going to be in a debt or equity? Because I want you to think like an investor and understand that as an investor. Last week we did a journey of knowledge, how knowledge is important. Here it's logical mindset that I'm trying to inculcate here. You have to invest in this company, my company. Will you go in for equity or will you prefer debt? Understand the nature of my company. Let me help you with this. My nature of the company is AI powered tutoring app, and I already have about 10,000 users. And my need for the fund is to add new features and go to the market. So you as an investor understands this is a company. If I see your criteria of investment is going to be, if this company is going to grow like MRF tires, your prices can go up really, really high, right? Your returns can go up really, really high, right? Now that's what you want to see. Here, an ideal thing would be you would be looking at equity. Why would you be looking at equity? Because you see a potential of multiple times the return. Education industry is booming and AI is trending. If the company succeeds, your 10% stake could become worth crores. And that's the reason why you will look at this. You get it? Right? That's the reason why you will look at this company where there's potential. Did that make sense? Can I move on to the next pitch? Let's see if you're ready for the
Yeah.
next one.
Don't we have to answer
Answer what? Debt
the
or
question?
equity? No,
Debt.
this one. Now look at this and you have to give me an answer for this. So RoboClean is again an AI-powered robotic vacuum cleaner that learns home layouts and cleans efficiently. Now they have a working prototype, but they need funding for a mass production and launch. The product is tried and tested and is doing really well. So my ask for this particular company is either you give me 20 lakhs and I give you 25% equity and you become a part owner, or you give me a loan of 20 lakhs, but it will be at an 18% interest rate, which I'll repay to you in about 4 years. Tell me, Shark Piyush, Shark Aman and Shark Ashneer, what is, you're going to give me a loan? Piyush,
No loan.
Ashneer?
I'll invest.
Okay. Reason for you to invest would be?
Because the technology already exists and उससे हो जाएगा, but it doesn't exist in India.
So it's a new product. It has a huge potential. The
Yes.
company can get you massive returns because you see the sales increasing, right? It's not a
Yes.
product that is
Because
there at every house.
it's cheaper than labor.
Cheaper than, like you are convinced about this product for yourself, right? So it makes you, that's a reason for you to invest in this company. Aman, Shark Piyush, would you like to reconsider your decision?
No,
No? Okay. So
I
you,
already have one.
no, No, but you have to look at the masses. You have to look at the masses. How many people do you know have it? Not too many people, right? So that means there's a huge potential of growth. So you will like to invest in a company typically which has a huge potential of growth. Got it? It's a new product. It's AI powered. Everybody is talking about AI. And it's a
You know
tried and tested
Roomba?
one. You can't go wrong. Sorry? Yeah, it's in the lines of Roomba only, right? So, Piyush, what is your... So typically, the best thing would be the optimum answer is to go in for equity. Why? Because it's growing business and the product has a huge potential. If a company does well, your profits can increase sky high. Like that's
But there's
typically the
correct
MRF.
answers.
Here it is, best choice here. See, why did
The one before
MRF
this was
tires?
loan, right?
No. That was also equity, beta. That was also equity. You have to
No, but
understand. You see, equity. Okay, let me explain to you. Why do you think MRF tires did really well? How many cars were there in 1990? You are all dreamers and innovative students, and you remember liberalization happened in the year 1991, and
91.
after that, multiple car brands came to India. And MRF tires were sold to these companies, right? Sales increased, quadrupled, multiple times it increased because tires are eventually going to cars and vehicles, right? Trucks.
Yeah.
So that was the reason for the increase. And that's what you all need to think. Okay. Moving on to the last one, Tasty Bites. Now, ready to eat healthy meals. Now, Tasty Bites sells organic, ready to eat meals for busy professionals. Now, my sales are good, but I need money for day-to-day expenses. And I need money that I do see potential in growth. Now, my ask is 7% equity, but I need 6 lakhs for 7% equity or 6 lakhs loan at 10% interest.
I need to taste it first.
Okay, Uday, I need focus here. Let's understand debt or equity. Are you going to be
Debt.
looking at debt or equity?
Debt.
Aman, Shark Aman, what is your call?
That
Okay, Shark Piyush, what is your call?
Debt.
Can you give me an answer, Shark Piyush? Why would that be? Why debt and why not equity? And please say, I will not look at equity because I want you to repeat equity word. Why not equity here?
Because I have no clue.
Come on. See, it need money for day-to-day expenses. That means the company is not doing really well. You see, the company is
And it's
not doing very well.
mostly for professionals only.
Right. So it's something which is a smaller scale business. It's going to be a localized one. And it's already running for day-to-day money, right? That's what it's asking for. Now, it's somebody that means this company doesn't have a huge potential, right? The company might do well, but not to the extent that it'll give you returns like MRF tires will. Does that make sense?
There's also competition.
Yeah, yes, absolutely. It's a product that has been existing for so long. The product here, look at the nature of the product that was there. Here we were looking at this one, we were talking about AI-powered robotic vacuum, which not too many people have. Prior to that, we were looking at AI-powered tutoring app. Here we're looking at dabbas, right? Which have been there for years and years. So I, as an investor, will look at this, not so sure. So I'll say, all right, I might as well put my money so that I get this much of interest in return here. Got it? Does that make sense? So typically, that's what our takeaway from this entire thing is, that debt and equity has different perspective from an investor. You will look at anywhere you invest from the perspective what kind of business that is into. Got it? Yeah. So now what I'm going to do is, Shark Piyush, you better give me a logical reason, and not because the other sharks are saying that. Okay? Original Shark Piyush will come in strangle you if you don't have a reason. Okay, now coming back, all of you, there are 3 questions and 3 people here. Piyush, can you check? Okay, let's do it together. How many forms of investment have we learned so far? List them out. All of you together. Let's do it together. If we've discussed.
Equity based.
Okay. Stop. No more. Equity is 1. Aman? Shak Aman?
Debt.
Okay. Equity, debt, Piyush, Shak Piyush. It doesn't have to be Shak, but I mean, remember what we did in the earlier classes. A normal thing we've spoken of, the most conservative way which you can do it right now, you'll go into a fixed
Stock
deposit.
market.
No, stock market is debt and equity only, beta. Stock market is debt and equity. That is part of that. I'm talking about, so you'll
Fixed
also look at a
deposits.
bank fixed deposit, right? Right? And if, I'm curious to know, I did discuss something else which the government offers and large companies will do. I just discussed that. Bonus points to the person who will give me that correct.
Good question.
Bonds. We discussed bonds, right? Low risk, large companies, when they take loan, they'll give you bonds. Okay? Got it? So that's how it is. Now, which are the 3 main pillars of investment? That means what are the 3 criteria that you have to keep in mind for investment? Simple 3 things. One is
Risk, time, and
knowledge.
yeah.
Perfect. Fantastic. Now, this you need to research. How many companies are listed on the 2 stock exchanges, Bombay Stock Exchange and National Stock Exchange, and give me a quick reply. Google. Research. No more Google. Research and tell. Can we tell? Okay, how many are listed? So, what is a stock exchange where these companies have listed their shares, right? Equity is listed there, which we buy and sell. So, every time somebody buys and sells a stock, it had the name of the owner of that particular stock has to change on the stock exchange, because eventually every stock is listed there, that who owns that stock, what is the value of the stock, when was that stock bought, everything goes on stock exchange. So on Bombay Stock Exchange, it's a simple thing. Did you research? How many companies? I'm just asking how many companies are listed on Bombay Stock Exchange. A simple question that you need to research. Piyush. Yes.
5,309.
Absolutely. That's a huge number. You're absolutely right. Shak. Okay, no Shak. Jay, how many companies are listed on the National Stock Exchange? Uday, do you have the answer?
I will have to Google that.
Why were you not doing it, son?
2000.
It's on my laptop.
Yeah. Okay. So you're absolutely right. So the point that I'm trying to drive home right now is that these are the companies which are on National Stock Exchange and Bombay Stock Exchange. Now, you as an investor, do you think you can keep a track of these companies always? Even if you start reading morning till evening, it may be a little hard, right? For where to begin, right? It's very difficult. So how do you do what exactly do you think will you do in such a situation where it's very difficult to start to know about these companies? So in such a situation, you turn to these instruments which are known as mutual funds. Okay, this is another instrument of investment in addition to the ones that we discussed. What are these? Because you will read about them, you hear about them quite a bit, and trust me, for somebody who's just beginning their journey of investment, till the time you gain your knowledge, you can look at this particular option because they have everything much easily explained, the portfolio is explained, and it's so much easier. Here you go. What is this particular thing? Let's understand the concept and then I'll show you what exactly, how does it work. So this is how we were just discussing. This is how we usually invest. In case of a mutual fund is nothing but one company who has one manager, a couple of managers. What are they doing? They decide where to invest. Okay. And these are the investors. So it's like 4 of us in this room decide that we need to invest, but we don't have the time. You guys are studying. I have my other work. I don't have the time to research those 5,000 companies and 2,000 companies or whatever and figure out my favorite companies. It's hard. So I turned to this company, which is a mutual fund company. And what are they going to do? They are going to help us where to invest. Okay. Now, what I'm going to do is I want you all to quickly research any mutual fund that you can do that. Just Google any mutual fund, all of you. And in the meantime, I'm opening one particular screen to tell you what is this mutual fund exactly. Let me just show that to you. Give me any name of a mutual fund. Come on, just Google name of a mutual fund. That's all that I want you to do.
SBI.
As
Yeah, anyone.
mutual fund sahi.
No. Mutual fund sahi is you're saying
That's
something else.
no, it's like suggesting mutual funds, right?
Yeah.
Isn't that itself one?
No, beta, it's not. Mutual fund sahi is just a punchline. ICICI is what he just said. Let me
No, he said
just tell.
SBI. He said SBI.
Okay. I will just take 1 minute and tell you. All right. Okay, here we go. Something. Okay. Where's your screen gone? I can't find you on my screen. Too many screens opened. Yeah, finally found you guys all. Okay, there we go. Here you go. Okay, so this is an app. You have multiple apps here, multiple apps. I have chosen one particular one, which is here. We'll start from the beginning. Tell me, can you see this red screen? Can you see this red screen? Please. Okay, so this is a Morningstar is where everything is, you have value research, you have Morningstar, you have multiple these. Okay, now when I look up, you see we're looking at mutual funds and understanding what mutual funds are all about. Let me just explain it to you. I go into the mutual fund section right at the top. When you go to this mutual fund section right at the top, what I'm going to do is I'm going to be picking on a particular mutual fund for you to basically understand. Which kind of mutual fund? Jay, you just named a mutual fund. Which one was this? ICICI you said, or which one?
SBI.
SBI is the name of a bank, but SBI has multiple mutual funds. Anything that you can tell me is, see, these are the mutual funds which SBI has. So let me just come to basically, I'm just here. Let's say this is one mutual fund. Just understand what a concept of mutual fund is. Okay. This is the name of SBI Balanced Advantaged Fund Direct Mutual Fund. What that means is this is the name of a mutual fund. Okay. And what is the role of a mutual fund is it takes money from multiple people. We were talking about 4 of us. We decide to invest in SBI Balanced Mutual Fund. And what are we going to do? Just to explain to you, what does this people do? Where will they put their money? So far, we learnt about only Mrs. Bector and DNI. But remember, you just Googled and checked that there are 5,000 companies, right? And we also know there are bonds. So here is where the managers in this particular mutual fund are investing. They have they bought some shares of HDFC Bank also, they bought some Reliance also. These are the shares that these people have already invested in for the company. You get it? So they have invested in, so they make a portfolio for us. Portfolio is they'll buy a little bit of share, a little bit of bond, they'll take a debt, and they will buy a little bit of equity. Now, this is an important concept that I want you to understand. It seems complicated, but again, I'll try and make it simple, but please ask me questions if you can't. Uday, Jay, Adil, all right? Please ask me questions. This is a holding, means they have invested in equity and they have invested in bonds also. So here it is. Equity means they have bought these shares which are listed on the stock market, which is these many shares. They've invested so much there. Okay. Don't go into the details, but this is what you can typically understand from here. Does it make sense? What a mutual fund, just to understand what a mutual fund is all about, that's all you need to do. Forget about all the other information that is there. And what it looks like this.
Yeah.
It does it, yeah? So going back to this, I hope
You're
this
not
makes
sharing your
sense.
screen again.
I'm doing it now. Tell me, can you see this? Now can you see this particular screen? Yeah? So this is what it is. It is a mutual fund is right here, which is taking money from all four of us, and they're investing into multiple companies. They have different instruments. Sometimes they can also buy, gold in a different form, paperless form. That's also a form of investment, which will be covered in the next one. So here it is, a summarize that when you don't have the time or, inclination to gain knowledge, that's when you turn to bonds or mutual funds for this. Okay, can you see my screen? I have changed my screen.
It just says Dreamers and Innovators has started screen sharing.
So you can't see my screen. Then tell me. Yeah? Can you see it now?
No.
It says the same thing.
Why is that happening? Can you see it now? Children, can you see it now?
Yes.
Okay, great. Last part that I want you to know is, again, you guys are young. What you can do is typically here. How you invest is also going to be, right? So far we learned the different instruments, equity, debt, and mutual fund, bonds. I hope they all make sense to you now. Yeah?
Yeah.
Now, how will you invest? Because you children are not going to understand until you go to a bank and loot a big chunk of money. You'll have a big chunk of money to invest, right? That's one of the things that you can do. Tomorrow, Adin, we can do that. Adin, okay, Piyush, Jay, and Ashneer. What are you guys doing tomorrow?
I am not free.
You're not free? Okay. Monday, let's meet at about 4 o'clock in the evening. All four of us, we'll go to HDFC Bank. I'll get my guns and we can all loot that bank, open the locker, and get all the money. Will that work?
Sure.
Okay, so let's do that. Then we'll have a lot of money and that becomes a lump sum that we can invest in. Okay, however, if we don't have that kind of money, what are we going to do? We start with something which is known as a systematic investment plan, where we start with a little bit of money and that we keep adding every month and it keeps increasing. Okay, just to show you that magic, last 2 minutes, I won't take more than, just a very little time we'll take. And that will kind of bring us to the end of the session. Tell me, can you see this particular screen
Yes.
where I've changed? So I've gone into this app. Again, you can simple go online and check SIP calculators. That is systematic investment calculator. Here we are. Piyush, tell me one thing. Okay, Adin, how much money do you think you can spare every month? Just randomly.
1,000 rupees.
Okay, 1,000 rupees you can invest. And I'll say that now you're a seasoned investor, we can look at even a 10% return. Okay, I'm just taking an example, 10%. I'm sure for you at your age, it's very difficult to imagine what the percentages are. But Uday, you can probably understand whatever percentage we take, it has to be way more than inflation,
Yes.
right? Now, time period. You said you're about 12 or 13, right?
Yeah.
So you would genuinely need a lot of money by your 30 when you're about 20, you're about 25, let's say.
Yeah.
Hana, so you would want to spend money. Now, you could have one goal till 25. So how many years till 25? How many?
12 more.
Yeah. So in about 12 years, if you save 1,000 rupees from now, you will have up close to 3 lakhs by that time. Okay. However, if you become a wise investor, and let's say in stock market, you can get as much as a 30% return also. So if you pick up a mutual fund, which is aggressive, which can take risk, which invests in the right company, even with a 30% return on just 1,000 rupees, you can get 13 lakhs. And that definitely at 25 will give you a kick to be able to buy your own car with just your passive income. Okay, Uday, I want from you a wacky figure. How much money do you have?
3.69 billion.
Shoo! How much money can you invest per month? So this is known as a systematic investment plan. The SIP full form is systematic investment plan, where every month you're taking out a little money and putting it in some form of investment, and you children can do it too as a minor. In your account, you have something known as investment accounts that even minors are allowed to have. You can invest in mutual funds, but you can't invest in stocks directly, right? So the same site that I just mentioned to you, or any site you want to go to, they'll advise you how risky your investment can be. And you at your age can take a lot of risk. So, okay, Uday, give me a wacky thing. How much money can you genuinely take out right now, beg, borrow, steal?
90,000.
Uday, can you give me a correct figure? I'll give you one chapat. Okay, on a
That
very
was
serious.
a correct figure.
No, how much money can you take out every month? You take 500 from mom, 500 from dad, 500 from mom, Masi, 500 for other Masi, 500 for Dadi, 500 from Nani.
yeah.
Let's increase the figure to how much money can you take out? Let's be optimistic.
10,000.
Isn't that a lot of money that you can take out realistically? You're spoiled. Okay. How many years do you have? How many years do you have that you would like to hold your money for? Give me an optimistic figure.
10.
Come on, give me but you want to buy a bigger
I guess.
dream, right? So let's go up to 35, because by that time you can increase your money to a lot more. So tell me, how many more years? 20 more years?
20.25.
20 years, and how much return? 30% is a decent return. Okay, if you can get a
Yes.
30% return, wow, you will have, how much money is that?
That is 15 crores.
Can you imagine?
No, wait, that is not 15 crores. That's 1.5 crores. So the commas are wrong on this website.
No, it's not. What are you talking? Why is it wrong?
Oh wait,
Hundreds, thousands,
maybe
lakhs.
Oh right, sorry, right. I'm getting confused between the two.
You understand?
Yeah.
10,000 you save now, in 20 years
Yeah.
will become 15 crores. Does that blow
Yes.
your mind?
Yep.
Even if you change it to
5,
5,000, let's be realistic.
7.5.
7 crores and 66 Okay? Let's reduce this also to, let's say, 20%. It's still 1 crore. It still blows your mind, yes or no?
Yeah.
You get it?
Yes.
That's the passive income without, and this is not your return
that's-
from your salary. Nothing. This is not
Yeah.
even your return from your salary. This is just beg, borrow, steal from your parents and family.
Yeah, but the thing is, there's what do you say? There's no spending included. Because
Obviously not. SIP is
'cause-
not about investment. SIP is only taken out after you've spent. Remember budgeting?
yeah,
Even if you take out 2,500, which is a realistic one, right? 2,500 you take, and you find a mutual fund that you can do it right now at just 20%. You are, how much is this amount? 79 lakhs. Now that's an achievable target.
yeah,
You understand what is the point that I'm trying to drive home? Systematic investment plan can be started by you all right now. Do that.
yes.
Okay? Got it? Does that hit a chord somewhere? I hope it does. Okay? At that note, I will end the class today. Look forward to seeing you next week. We'll be sharing the recording with everyone, and all those children who are going to be seeing this recording later, please make sure that you reach out to me if you need any help. Okay?
I probably won't be there next week.
Fair enough. Next is only the last session. If you can attend, do attend. But if you can't, I understand. Okay? It's only the last session for this particular body.
It's mom's.
That's Sunday, right? We'll see.
No,
We'll
no,
see.
no, no. Her birthday
We'll
is
see.
on Saturday,
Okay,
so
okay. We'll discuss that. All right, we'll send you the recording. At that note, all
Yeah.
the best. Bye-bye. We'll see you later.
bye.
Bye.